Welcome back to Rich Dad Stockcast. I'm your host, Denney, and today we're diving into one of the most important concepts in the entire Rich Dad philosophy. Now, it's cash flow investing. Now, most people work for money, but the wealthy, well, their money works for them even while they sleep. And cash flow investing is really what separates people who are always grinding from the people who truly build freedom. So today we're breaking down why cash flow matters, how to create it, and how you can start even if you're new. And joining me, as always, is Rich Dad expert Andy Tanner, who specializes in teaching people how to build income-producing portfolios. Now, before we get started, make sure you visit stockcastbonus.com, grab your free tools. If you want to start earning while you sleep, this is where the journey begins. Andy, welcome back to the show.
It's great to be with you, Del. Excited for this topic. I think everyone in the world would be interested in this topic, so it's going to be great.
I believe so. I'm kind of watering at the mouth to get into this. But before we do, stockcastbonus.com, amazing free tools and resources. There's a lot that's in there. What do our listeners receive when they actually go there?
Right now, the flagship product on there that's free excuse me, is it's a great ebook. I wrote it with a partner of mine. It's designed to help people really design their weekly meeting. It's called the Power Six, how to take 6 numbers in your life, start recording them, manipulating, changing them. If you were to look at a financial statement, look at income, expenses, net income, asset, liability, net worth, those 6 numbers, those really tell the story of your financial life and direction and prosperity. How do you change those numbers? How do you look at one of those 6 or a combination of those 6 and say, I'm going to build this one, or I'm going to reduce this one, or I'm going to move this one over here and work on this one? And that's what that's about, is how to go to work on your own financial statement to make it one that is prosperous. Picture and imagine a financial statement that you have now and the one you'd like to have in the future, and a bridge between the two. That's what that is. So stockcastbonus.com, it's available, no charge. And it's a great opportunity to get to know each other and get to know people for no cost. So there you go.
Fantastic. All right. So let's start with the basics. Cash flow investing. What is cash flow investing, and why do the wealthy prioritize it over everything else?
Yeah, it's really interesting, Del, how people that is such a non-secret that's a secret. If I were to go to CNBC right now, I'd bet every dollar in my wallet that they'd be talking about capital gain. They'd be talking about increases in prices rather than production. And if I can, when you said we're going to talk about this, I grabbed my object lesson. So I don't know if I'm allowed to go after this, but this is a funny toy right here. It's a cash flow Jack in the Box, and it's got money coming out the top. Noah built these, man, because I always used this as a drawing, and he gave it to me for Christmas at our company holiday party. And a cash flow Jack in the Box has 3 parts to it. The first and most important part is the handle, right? And the handle, the handle's what does the work, right? The work gets done. And so this is earnings. This money's earned because of the work that's done. So you have the work and you have the earnings. And that's what cash flow investing is. I look at the quality of work being done at a real estate project. There's some high quality real estate projects and some low C level, Section 8 projects, right? What's the quality of the work that's done? And what is the evidence that work it has staying power? What is the evidence that work is valuable? What comes out here? And that's what cash flow investing is. If we were to go to CNBC right now, they wouldn't talk about either of those. They'd be talking about the price tag of the asset. And these go up and down. They go up and down, up and down, up and down. And they would say, oh, what's NVIDIA today? Or, how far did, Apple fall today? Or, who's the losers? A loser is a price going down rather than a cash flow issue. And so, compounding has to do with reinvestment. And if I have a Bitcoin and it goes up, well, it went up. But how do I reinvest? There's nothing that's been produced. Now, if I have a rental property, I can take a couple of different things. I could pull the equity out and I could invest it. I could take the rent and I can invest it. I could take the vending money from the coin laundry and the vending machines. I could invest it. And I could buy other assets through the production of the original assets. So when we invest for cash flow, we're earning money. And when we invest for capital gain, we're trying to gain money. We're trying to get gain, as a phrase. This guy's trying to get gain. And the reason people love capital gain is they get to ignore the work part. And that Garden of Eden mentality, that biblical framing of work as a life sentence, from until you return to the dust, you shall work all the days of your life until you return to the dust. That work, people don't like it. Well, it's okay if the company's doing the work, because then I don't have to. And I have a lot to say about that I'm sure we'll get into. I have a lot to say about that.
All right, good. Well, let's talk about cash flow and the benefits of it. There's a lot of the market can be pretty volatile. We don't know what's happening in the future. A quick little news clip: the president says this, the market goes up and down, but cash flow creates stability. So why does what does consistent income do for an investor's confidence in their strategy?
Well, Warren Buffett has this concept he talks a lot about called a moat. And we all know what a moat is. It protects the castle. So you want a deep one and a wide one and put sharks and alligators in or whatever, it's to protect the castle. So that's a great metaphor if you understand, a castle, and you want to keep Rapunzel safe, put a moat around her castle, right? But what does that look like in business? And it took me a little while to figure out, what's a moat in a business? What does that actually look like? I understand the visualization of the castle, but what does that look like around a business? What is that moat? And to me, it's staying power of the work. It's the value of the work. Would you like a couple of examples? Do we have time for concrete
we do,
stuff?
I would love to hear some examples.
So a couple of years ago, Warren Buffett wrote about one of the best companies ever bought, which was Burlington Northern Santa Fe. And I use that as an example because it is a coup, man. That's such a great investment that he made. First thing he did is, if you run a Ben Graham, and he doesn't use the Ben Graham formula in the Intelligent Investor because a lot of people think that was Ben Graham's formula. It's not. He just showed it as an example of what one might look like. But if you ran that actual Ben Graham formula at the time in probably 2008, Burlington Northern Santa Fe would be valued about $102 a share, and it was trading in the 70s. So he's looking at this and saying there's value there according to the formula, or whatever formula Buffett actually uses. He saw value. And so he sold some puts to promise to buy it cheaper, and he made millions of dollars, tens of millions at a time, on his way to buying the whole railroad. So he bought the initial shares, got paid to buy them, got paid $6 a share to buy them at 75. Wound up buying the rest of the railroad at about 102, what he thought would be right. That's what he spent most of it on. So he buys this. Why the confidence? Why the confidence to make advance promises to buy it? And why just say, I'm going to buy this whole damn thing? Well, think of it this way. If you were to read Burlington Northern's prospectus that year, just their investor brochure, they had some statistics, 14 million tons of lumber. So if you're a real estate investor and you want to do a development, how are you going to get your lumber there? You're going to put it in your car? You put it on a truck? You're going to fly it there? You use rail. 40% of the nation's freight in North America is rail. 40% of it. Burlington's the biggest. Buffett said that he estimated that it'd take about $500 billion to rebuild that business from scratch. So if someone were going to say, yeah, let's go compete with those guys, let's go match what they've done, there's not a person in the world that's going to put $500 billion into that to do it. And he says, do you know how many decades it would take? Do you know how many bridges we've built? Do you know how many miles of rail we've laid down? Do you know how much stuff has been built over years and years and years for that rail network to work? It's untouchable. Nobody is going to say, let's raise a $500 billion over 30 years and try to build all that out. If you want to move grain, food to a grocery store, you want to move coal, it's not done by truck, it's done by rail, right? Carbon footprint's lower, everything about it. That's a moat. No one, and he's in a position of power, because if you want to move something, you got to call him up and say, I need this moved. And there's just not that many options. There's a few. How many railroads are there? And Burlington Northern Santa Fe is the biggest one. So he kind of just went through that and says, look how solid this business is. Coca-Cola, he talks about. It's not about the price going up and down. It's about, will the work continue to be done? Coca-Cola sells 2 billion drinks, 2 billion beverages a day. It was started in 1886. It survived World War I, World War II, Gulf War, Vietnam War, all the wars it survived. Cola Wars, it survived in the 80s. Survived the Pepsi Challenge. Michael Jackson lit his hair on fire in a commercial trying to fight him. Recession, depression, 1929 depression, 1980s inflation, COVID more recently. We're drinking Coke and a smile. And he looks at a company like Coke and Kraft Heinz, who make an Oscar Mayer hot dog at on a Oscar Mayer hot dog topped with Heinz ketchup with Ore-Ida French fries and a Coke. And he says, look, my great grandchildren will be doing that. That's a moat. So that's the work. That's the importance of the work. And that's how you make money when you sleep. Now, let me give one more thing before I hand the mic back. There's a quote that I probably quoted 10,000 times by Warren Buffett. And one day it hit me that I wasn't paying attention to the most important part of the quote. I probably quoted him 10,000 times before it hit me what it was. I would use that quote to bolster people's confidence. And the quote was about the fact that you can do this better than Wall Street professionals. That's the main thing I took from it. But there's a little sentence in the middle of it that hit me one day. I was like, holy cow, that's the more powerful thing. So I'll give you the quote. And I hope I don't butcher it because I'm doing this from memory. So, and as I get older, my Alzheimer's kicks in, who knows if I can remember this. The ultimate irony of the investment business is that there's no question that an obstetrician will deliver babies better than the husband or wife. And if you take dentists as a whole, they will remove teeth or fill teeth better than if the patients try to do it themselves. But in the investment world, someone who believes in American business will seek out the lowest way to participate in that business and do it consistently. They will achieve results that exceed those of investment professionals as a group. It's the only industry I can think of where the Wall Street professionals subtract value from what the layman can do himself. So I used to focus on that last part. They subtract value from what you could do on your own. There's just no question that's Wall Street fees, and you can beat them, 85 to 90% of the time, you're going to beat Wall Street if you do it yourself, just by buying the S&P. What struck me when I read that one time, it just hit me. He said this, though. He said, someone who believes in American business, now listen to this statement, and will seek out the lowest way to participate. What does it mean to believe in American business, and what is the lowest possible way to participate in a business? What is the lowest way to participate in business? That question is so important to understand. So I'll give the answer. It's ownership. If you look at Coca-Cola and everyone that is attached to that business, who participates the least? Well, let's look at everyone in the business. The CEO went to work this morning, so he's there and he's helping turn that crank, right? He's cranking away. The guy who, double checks the formula is cranking away. The truck drivers, the bottling companies, the distribution, the advertising people, the customer service, whatever it is, everyone is going to work there except Warren. Now he's participating because he owns the business, but he's asleep or awake or doing whatever, but he's participating at the lowest possible level, the least amount of work you can possibly do. And this is what he does at Coca-Cola. He collects their dividend, and he collects their dividend. That's what he does. That's how he participates. He cashes the check. It's just deposited in his account. He that's it. So when you talk about making money as you sleep, he says, look, the most important number is the operational. And the operation means you walk in and say, you got a fine operation. Things are operating right. They're operating. There's work being done. I just own the work instead of do the work.
That's phenomenal.
So that's how you make money when you sleep.
That is phenomenal. And my object lesson is I've got that Coke can right here on this side. So probably a penny went to Warren Buffett as I'm drinking this right here. I'm not going to
tell you what's in here. Well, I should. It's a Pepsi product. I got Diet Mountain Dew in here today.
Oh, now we're doing the Pepsi challenge on our podcast. Hopefully no one's hair burns off.
That's terrible. I shouldn't be drinking that garbage, but I'm drinking it today.
That we are. Well, let's do this. Let's take a quick break. We've unpacked why cash flow matters, why it's the backbone of financial freedom. But in the second half, we're going to get tactical. And when we come back, Andy's going to walk us through how to actually build cash flow, the tools, the strategies, the beginner-friendly ways to get started. And remember, if you want to start building real passive income, head over to stockcastbonus.com. We put together free resources to help you to take action today, not just someday. So stick around. We'll be right back.
So far, it's been great. I needed a source where I could really enrich my education through stocks. I didn't really have an avenue for it, and it's helped me a lot. The simplicity has really gotten me on the track to where I enjoy the learning as well as it's really solidifying in my mind. And like, they're not just trying to sell you something, they really care about the people that are in the course, and they really do care about you and your personal goals, and what you want to do is to help you and your family and whatever your goals are in life through that. So it's really been great.
Welcome back to Rich Dad Stockcast. Now we're going to get into the good stuff, how to build cash flow that pays you while you sleep. And I love sleep. Andy, let's walk through the strategies. What are the most accessible cash flow investments for beginners? Is it dividends, covered calls, rental, real estate, something else? As you think about the beginners, where do we start?
I love stocks for beginners because it is scalable. I bought 10 shares of the Panera Bread Company. Is my first trade was 10 shares. And I could afford more than 10 shares to do that trade. But I did it just to see what it was like to push the button and do it. I mean, that was it. I just said, well, I bought 10. It was like back then it went public, then it went private, then it went public again. So this is the first time. And it was so new. It was $16 a share. And I didn't do it to make money. I just did it to buy something. Another one, Kim Kiyosaki we were in Argentina. She gave such a great talk. And my kids were there, and they were probably 8 and 9, 8 and 10. And she said to the audiences, if you have nothing in your asset column, go buy a silver dollar. Go buy a 1 ounce silver. And that's really what a dollar is 1 ounce of silver. That's really what a true dollar was. It was a 1 ounce round of silver. What is it today? $54 a share, whatever it is. And my kids went home and they they were still in the Santa Claus phase. My 8-year-old was kind of skeptical, but they said, I'd like some silver in my stocking. And so Santa brought them some silver. And then they had some lemonade money where from their lemonade stand, they bought some silver. And they've kept that in their safe for all these years. And man, it's like $54 a share now. We were talking about it yesterday. So you could buy some silver. It doesn't cash flow, but you at least bought an asset, didn't buy something that's a liability. I love stocks because you get to own other people's intelligence. It's the ultimate lever. Think of it this way, Del. I can't build an iPhone. Are you kidding me? I mean, if you put me in the garage to build an iPhone, I'm never coming out of there with an iPhone ever. Like never. Like in a zillion, trillion years. Like if my life depended on it, my family's life depended on it, we would all die. I couldn't do it. It's just beyond what I could do, right? I couldn't do it. I don't know how to build an iPhone. And yet Steve Jobs says, hey, Andy, you don't have any smarts, but you got a couple bucks, don't you? I says, yeah. He says, I'll share. Think of that word. I'll share my IP with you. I'll share my machine with you. I'll share my employees' efforts with you. I'll share all the work that I do. I'll share it with you for a couple of bucks. Are you kidding me? You out of your mind? If you go to Costco, you're going to see a transfer of wealth every Saturday, man. And people are lining up and fighting for parking spots to give their money away. You can own it. You can have a share of that. You can get your share. Is it free? No. Is it worth it? Yes. So I think stock ownership, I love real estate because it levers the debt and the taxes so well. But real estate, that's going to take someone the ability to raise some capital, raise the equity, and you're going to have to use debt properly. And you probably have to go in at a scale of at least, a mid six figures in your commitment. Right. And the reason I love stocks so much for beginners is go buy a freaking share. Buy one share just to see if it works. So you say, I have a share of this. If you have the confidence to buy, have the confidence to sell. If you own an iPhone, what more evidence do you have? You bought one. How many of your friends have them? Would you be afraid to go into the iPhone business and try to sell iPhones? Look at how many people are going to buy the whatever number we're on, 17 or whatever the hell it is. I don't know what. I have an old one. Mine's 14, so I don't know what the new one is. Mine works, so I never get new. My kids always want new iPhones. I don't need a new camera. But people are going to buy these things. So if you have the confidence to go to Costco and spend money, why wouldn't you have the confidence to earn some of that money? I mean, don't you really believe? Why are people afraid? I'll tell you why they're freaking afraid, Del. They're afraid of the price tag moving. Look, I ain't afraid of that price tag. Costco is going to do that work. That's going to keep going. And this is going to keep being produced. I don't give a crap about this. Buy it once. What do you do when you buy something valuable? You go home and you clip this off, and then you use it for what it was designed for. So cash flow investing, you buy this, you go home and you clip this price tag off, and you have faith in the work that they do. Coca-Cola has been doing this for longer than any of us have been alive, and it will do it throughout the lifetime of our children. It's solid. It's not going anywhere. It's got a moat. 2 billion drinks a day. They raised their price by a penny. They just made $1 zillion, right, over the year. So it's the work that you have confidence in, not the price. And the reason people don't have any confidence to buy stock is they're putting their confidence in the price, which deserves no confidence. But it's the work. And Costco and even companies that are why is everyone so damn excited about NVIDIA? Because the price moves a lot, right? Tesla, the price moves a lot. I'm more excited about Tesla because of the work they do. NVIDIA because of the work they do, not the cockeyed price. So that's cash flow investing. What work do? They do it good enough, efficiently enough that a profit is produced. If it is, share Share in that. Get your share. Step right up. So that's a great answer to that question. How do people start? Start with stocks. It's scalable. You can buy, you buy a stock for $100, right? You don't have to raise six figures to do that. You can get involved and compound.
Well, let's dig a little bit deeper in the stock market then. So, I think a lot of people don't realize how you truly can cash flow from stocks. Most people believe that you just kind of buy it, set it, forget it,
Buy
and
low, sell high.
buy
Yeah.
low, sell high.
Yeah.
Hope, in 65, I'll look at my bank account. Hopefully, it's grown a little bit, right? But we can
Yeah.
cash flow in the stock market. So, how can someone cash flow in the stock market? Is it options, covered calls, dividends?
It is.
What do we do?
Well, to me, you buy the stock and collect the dividend as your first. That's your foundation. So let me give you an example I use a lot because it's one of my best ones. When COVID hit, everything goes down, and I bought a bunch of ExxonMobil. And the reason I bought so much ExxonMobil is they had at that time, it's gonna be 50 years soon. There'll be a dividend king or aristocrat or whatever the hell they are, but they had, I think at that time, like a 38-year streak of raising their dividend. Now, look at that 38 years, and you're looking at inflation, you're looking at Gulf Wars, you're looking at dot-com bust, you're looking at subprime meltdown bust. You had some pretty brutal times, economic recessions, where they just kept raising that dividend. They just kept raising it. So back then it was 85 cents a quarter. So that's $3.80 or whatever that, I don't know what the math is. It's like 380 or something like that. And you could buy it in the 30s. I got it in the mid 40s. And the price is over 100 today. Who cares that it's doubled? In fact, as it approached 120, I think that's almost a tripler. But that's meaningless to me, because why am I going to sell my golden goose? No one buys a goose to sell the goose. They buy it to take it home, clip the price tag off the goose's neck, and say, get laying the eggs, pal. That's your job. Lay those eggs, and then I'll reinvest. So the dividend was the first one. Is that, today, if you look at their dividend, it's going to go to $4 a year this year, right? In January, they'll announce that they're going to go from 99 cents to $1. So they've gone from 85 a quarter to $1. They'll announce that. They have that streak going, right? So when COVID hit, if I buy it, at 40, and you got $4 a year, that's about 10%, roughly, right out of the gate. Then we do something called stacking income. I have a webinar on this. If people write us, I'll give you a link. You can watch the replay if they want. Just go to the cashflowacademy.com and find a support link or something. Say, hey, I want to watch your webinar on this. And then what I do is I get paid to buy, like we talked about Warren Buffett selling puts to get paid to buy Burlington Orange Santa Fe. That's a little bit above the pay grade of a podcast. And then you get paid to promise to sell at ridiculously high prices that don't get there. It's probability based, right? Start making promises to sell above a standard deviation, know how to hedge it. I think I've written covered calls every month since COVID, so 5-6 years, or however long that's been, 5 years. And I think I've had to make 3 adjustments in the whole time I've done it, because I write them conservatively. So we stack income, dividend, covered call income. You want to acquire some more cash secured put income. If you're making 10% off your dividend, another 8% is not unrealistic with pretty conservative deltas on a covered call. It's 18 to 20%. Why would I ever sell a stock that doubles if its cash flow is on money invested on the original investment is 20%? Why would you ever freaking sell that? And it's just going to get better with time as they raise that dividend. If they keep that streak, and here's what else is crazy. See, the reason it's so high is as the stock price goes double or triple, it gets into the 100, 120 range. Now the covered call premiums, I can go more conservative because they're more expensive to do because the stock's more expensive. So I have this initial investment, right, at $40 a share or somewhere in there, but I get to write calls at the $100 price. Yeah, your mind. So, is this sophisticated? Not really. It sounds sophisticated if you've never done it before. It's simply awful, but it's awfully simple if you learn. So yeah, you have ways to cash flow this. I could give a rat's ass about the price. I don't care where it's at. I couldn't tell you what the price is today. I think it's above 100. I don't know. Maybe it's fallen. Maybe it's gone up. I don't know. I literally don't know what the price of my stock is right now. I'd have to tell you next Monday when I look again to write my covered calls. Then I'll know what it is, and I'll forget about it for a month. And then I'll look at it again and forget about it for a month. But that's the lowest way to participate in American business. And why wouldn't you want to own ExxonMobil, man? Why wouldn't you? Everyone's filling their car with gas still.
And probably for the foreseeable future, and especially as some of the announcements lately from the president about car standards and whatnot. So it seems like oil is going to be around the horizon for a little bit. Go ahead.
We need it. We need the oil. I mean,
Yeah.
Like Al Gore comes out with an inconvenient truth, and maybe he's right, maybe he's wrong. I don't know. But at that point, 87% of the world ran on fossil fuel. And that was, however many years ago. Well, we've gone from 87 to 85. We've dropped it 2% with all the wind and stuff we've been doing. So as an investor, I don't get political on that stuff. I just want cash flow. I can't control all that. I can control whether I own the assets that produce the cash. That's all I can do.
Indeed. All right, last question. What's one, love this word, action step someone can take this week to start earning cash flow?
It's easy. That's a softball over the plate. Go to Stockcast bonus and start working with us. And great to have everyone on the podcast, on the YouTube. Let's start doing stuff together. Let's start doing stuff. Go there, download that free ebook, write us emails, tell us how it's going, and we'll take you by the hand, and we'll teach you how to buy a stock and teach you how to get a dividend from it and reinvest those and get some extra income by stacking income. If you haven't seen our stacking income webinar, it's about 90 minutes or so. I got a 2.5 hour version, 90-minute version, depending on which one you want. And how much time people want to put in. But it's better than a Netflix special ever was, man. It is awesome because you're like, wow. And I break it down, show people how to do it. It's really cool. So write us an email and say, hey, I want to watch that or whatever.
Beautiful.
So there you go.
I love it. All right. That wraps up this podcast today. Cash flow is the great equalizer. You don't need to be born wealthy. You don't need a massive portfolio. You just need the right mindset and the right strategy, and you start building income that pays you 24/7. Absolutely. And again, Andy, thank you for breaking this down for us on how to earn money in your sleep. If you're ready to start creating your own cash flow, again, go to stockcastbonus.com right now. Get the tools, get the training that'll accelerate your financial education fast. And if this episode helped you, like it, subscribe it, share it with someone who wants passive income but just doesn't know where to start. You're not here by accident. You're building something that most people won't. Stay smart, stay invested, and we'll see you next time.
Thanks, Del.
This podcast is a presentation of Rich Dad Media Network.